How's it going? Welcome back. It's Jonathan. Okay, well, I don't think I need to say anything. We all know where the price of Bitcoin is going. However, there are 3 dates that I have been watching this month, and if you're in the month again mastery course, you'll have those 3 dates too. So I can tell you right now that Bitcoin is pushing past primarily some of the dates that I have been looking at. However, we're now running into another one, and we have another one in a couple of days. I'm going to give you those dates today because Bitcoin's price action around these dates is possibly going to signal if we're running into a market top and that this market is going to reverse quite sharply. Now, before I give you those dates, I just want to talk about one other thing, and it is one of the methods from Louise McWhirter, which is going to be using, okay, so just hold your breath. It is going to be using the moon, so don't gasp. No, you don't need to gasp. It's going to be using the moon to forecast, markets bias when it comes to actually knowing if we should be going long or short a particular market at a particular time, or when a market is just doing what it wants and it's overextending. Okay, so I've got the Bitcoin USD chart right here. I'm using the Alfie Trade software right now, and I'm just going to be opening up one of Louise's methods, and we are going to be looking at some of the past movements of Bitcoin when it's come to what the forecasts have suggested. Okay, now I'm not in a position to explain this to you today. This is not the aim of this video. I will give you a brief overview of what you're looking at though, so that you can understand what's likely to occur in the future. Now, to put it into context, when the market is pushing up, we also want to see the energy levels around these times also pushing up. When the energy levels are pushing down, we also want to see that the market is pushing down. Okay, again, when the energy levels are pointing up, when they're pointing down, when they're pointing up, pointing down, and so forth. We want to try and get these synchronized as often as possible. Now, through my own testing, we've able to say that there's generally a 75% chance that your forecasted trend direction for a particular month is likely to be valid or invalid. Okay, that means 8 out of 12 months we're likely to suggest that the market bias is likely to be bullish or bearish based on a particular theme or based on the energy level at the time. Now, if I was to break it down for you and show you even further what this energy level looks like, it's very simple. If, for example, I just click on any of these, what it's going to do is it's going to give us, and I'll just move this across a bit, it's going to give us transiting information, which just means the planets are on the left-hand side. And then it's going to be giving us the aspect that occurred. And then the natal information is on the right-hand side. And then we get a score of basically how many times the event occurred and what the actual end score was. In this instance, after all this information, the end score was 8. And this is recalculated every time there is a new moon. Now, a new moon, for those of you who are inclined, is just the conjunction between the sun and the moon at a particular time, and they just line up to a certain point in the sky. That gives you your new moon, so your new moon cycle, which lasts around 28 days, and then it goes out from there. So each one of these, sideways movements is basically the 28-day cycle. Then we get our new energy level, 28-day cycle, new energy level, 28-day cycle, and so forth. If the market is likely to be bullish, then we would also confirm that with our summation of how many points we got for that period. And if it is likely to be bearish, then we would also get our summation of how many points we had. In this instance, this low here, we had a negative 24. This low here, we had a negative 30. This low here, we had a negative 28. And up here, we had positive 40. We had positive 48. And this period right here, we also had positive 28. So this was indicating rising markets. As long as it's above this flat line, that generally indicates rising markets. If it's below the flat line, it indicates possible bearishness for that time period, okay? But there's also the energy level sequence where it moves from high to low, and that's also going to give us a trend. Okay, does that make sense? Now, there are going to be some time periods where the market deviates from this, and it's generally at the end of cycles or at the end of a point where speculation overtakes market normal behavior, I should say, where people are over speculating, they're overhyping, they're in the final phases. Now, I know that the last time I spoke to you was probably around January to February timeframe. We were looking at that 3-month or that 90-day cycle, and the message was that if it crosses this top here, then the low is going to be higher than the low that occurred before. If it doesn't cross above that top, which we'll take a look at the chart soon, then the low was going to be lower than where it began. It pushed up, and it kept pushing up, and it kept pushing up. Okay, now we're at basically all-time highs. That's where we are now. So the point is, and why I wanted to bring this up with you first before I give you the dates, is because there have been some times in the past where the market pushed higher into the end of the cycle, outside of where its energy levels were indicating. Okay, so we see the energy level pushing up into a peak, and also the market was pushing up into a peak. We see the energy levels pushing up into a peak, and then the market was also pushing up into a peak. What we have right here in this instance, and we can zoom in on this period right here, we can zoom in on that, and we can see generally more often than not the markets are rising and falling as they should have. But this period right here is what's got me concerned, where the energy levels, if we were to use the McWhorter theory at least, the energy levels here are not matching market expectations. Okay, the market has gone outside of this energy level. It's done in the past. You see, it's done it here, where the energy level was suggesting the market should go down. However, the market went up. This energy level here, where we can see the decrease, I can't draw lines, but we see the decrease from up here down to here. The energy level was decreasing, still positive. It was still, if I click on that, it was still positive too. However, the energy levels were going down. However, speculation was going up. And this is when Elon Musk was coming in with all this information about, Tesla buying Bitcoin around this time period, okay? So I just want you to keep that in mind, that there are theories that exist, or at least some people use, that are not lining up with this market movement, okay? So this period right here did not line up, where the market was pushing down into negative territory and the move was up. And then this one right here, basically where we have a weakening energy level, even going into a possible decline towards the end of the year, or at least around June, the market movement is moving very, very far away from it. The dates that I've been watching and putting out, there was a few of them. First one was the 28th. Okay, let's go ahead and just jot down to the one-day chart. So the first one was the 28th. Okay. The second one was the 5th. And the third one was going to be the 11th of basically the month that we're moving into. So this was the 28th of Feb. My God, how do people use this to write? And these ones were both March dates, okay? So what we have here is we have the market move up, and I believe that it was some Facebook groups around this time period here that I said I'm watching for the 28th to 29th to be around a top. The market moved up into its first top on the 28th. Again, it all depends on your time zone that you're trading in. Again, if we change the time zone, it'll also change the dates, depending on where you're located. If I go back to at least my time zone. And then the next, the original outlook I had, and I'll share it with you now, was that the market was going to pop up into the 11th. Okay, the market was going to pop up into the 28th. And then it was going to push down into a low, possibly on the 1st or the 2nd. And then it was going to pop up to hit a high on the 5th. And that was going to be a lower high. Okay, so the high was going to be lower than here. And then it was going to push down into the 11th. That was the original outlook that I had in mind. What's happened though, and this is why I'm getting a bit concerned, is that we've had our first top occur on the 28th. And anyone can learn this, okay? This is not secret knowledge, okay? You can learn it if you put in the effort, or if you know some GAN stuff, you can learn it. The next one that we're running into now is the 5th, okay? This was the next date that I wanted the market to turn on. Ideally, the situation would have been a lower high, okay? That would have been the ideal situation. The more times this market makes the top, like on our turn dates, I've said it before, tops are bad, bottoms are good. That's when we get the sharp sell-offs, okay? That's when the market confirms that it's now topping out and it's going to start to sell off. Now, I don't care what you think. I don't care if I'm right or wrong. I'm just putting this out there for you to consider. You don't need to trade on it. You don't need to do anything like that. Just for you to consider this as a theory or strategy to help guide you in your decisions, okay? Again, we use these dates to guide when we should be buying or when we should be not buying a particular market, especially if we're bullish. If we're bearish, we want to be using these dates as possible sell dates. The 28th time period would have been a good date with stops above the high. You would have gotten stopped out, no big deal. That's why we use, capital protection. And then we'd be looking now that it's broken out to the 5th. If the market falls and then moves higher into the 11th, definitely I'd be wanting to. Yeah, that's also a concerned face. So that's the 11th with the line under it, but it's definitely a concerned face on possibly this market's going to be pushing lower soon. And then we definitely just move out into our next dates. It's as simple as that. If it keeps pushing up above all these old dates, then we just move out to the next date. As simple as that. The more tops we get, the more concerned we are. The more bottoms we get. Definitely, if the market's moving down, then the more bullish we are, okay, as we get that market rollover. So where were we last time? I think this is probably where we were last time, where we were looking for this market to trend down, and if it was going to stay below this, it would make a March low, which would be lower than where it began. And if it crossed above this one here, then we're looking definitely for a March low, which is going to be a 90-day cycle low, which should be higher than where this cycle began. I believe the cycle began possibly around December time period, so maybe around these levels. Anyway, the market should finish higher than the 40,000 level, if I'm correct in my thinking right now. Where's my auto button? Anyway, forget it. I don't use this software enough. So I just want to put that out, give you an update, some things I'm looking at. This market has shot higher a lot further than I thought, and to be honest, if you're a Bitcoin bull, if we understand the Pareto principle, which the Pareto principle would state that 80% of the time things go one way and 20% of the time things go another way, or 80% of the time X happens and 20% of the time Y happens. If you're a Bitcoin bull, you're going to get the market right 80% of the time, because we know that the market generally rises 80% of the time, falls 20% of the time. That's just the Pareto principle. It can be used on the Australian stock market. If you look at historical evidence on the Australian stock market, I'm sure that there's, I can't quite remember if it's ASX.com or Market Share Trader or something like that. They put out basically the historical yearly figures for the Australian stock market, and it was like 79.8 or 81. It was just basically around the 80% mark, where the end of the year was higher 80% of the time, which was a direct Pareto principle. So if you just follow the Pareto principle and you're just bullish, you're going to be correct if we get this statistic proven right 80% of the time. So being a bull is basically a no-brainer. The reason why I like to be a bear when everyone's a bull is mainly for capital preservation. So we're making money, of course, but it's more so important on when to get out. And if you're not getting out at the right time, then that's when you get hurt. And the problem we have is most people get in at the wrong time. Okay, myself included. Like if we bought this break here, well, yeah, sure. If you're a scalper, you'd be getting in at the right time because you're trying to make $2,000 or whatever. You're trying to capture the move of $2,000. But technically, it could be the wrong time because we're moving straight into the 5th. Okay. So we always look at the dates, we always look at the time frames, we always look at the cycles, and then we just have to accept that sometimes this market is going to move outside the cycles. Yes, definitely, like I said in a few videos ago, the rules of the game have changed, and I myself not yet fully understand these new rules, and they've definitely tripped me out this year, moving from 50 grand up to 68,000. So I'm not going to try and guess those rules. I'm just going to keep trying to understand them. If you follow Pareto principle, you're right 80% of the time. However, I want to be looking for when is the bad time to be buying. And right now, I would definitely be cautious, especially if we hit a top on the 5th and then we start to run down. Possible buy period could be later on in March, if not April to June. We'll see how this goes, though. Just something that I'm watching for. These are the dates. Everyone else will give you the price analysis. You just come to me for the dates. Okay, I'll give you the dates and time periods.